Low Warriors getting ready for the number in 5 minutes. Here's our second flash crash in silver. Steve Volge had a 1550 target. I told him to pull his order to look for 14. I had inside information about this flash crash. The conspiracy continues in the silver market. Nice trade, Steve Volge. Everyone ready for the number? Hello, Joel. Kevin, how are you? I'm just missing somebody here. Anyway, hi, Windsor, V, everyone. So before the number, I would say my best call was this, selling this rally at the 2-week off number at 24.37. Got a handle and a half drawdown, never gave you any heat. So we've gotten the retest Greg was looking for almost. I still think there's another low. And it's actually the second negative week in a row. Hi, Steve.
Coach, good morning. Just wanted to say that if you look at the short-term time frame on SPX, our members already know since yesterday, we have a head and shoulders pattern, actually. So it doesn't look good at the moment. It got triggered when we dropped below 2,414, if I remember the exact number. So if you zoom out a little bit.
4 hour shows?
Sure, hourly as well, but you need to zoom out. It's not pretty, but it's there. You can see it.
Yeah. Yeah, and it's a second down week in a row. Maintain the negative reversal from last week. Test the off number Monday. So it's respecting sell numbers, which is kind of a shift, isn't it? So
indeed, but we need to reiterate once again, there's no real party unless we penetrate below 2,400. That's the first actually very critical level. Now, having to do with the silver flash crash, you remember, I think it was actually just after the previous flash crash that we got. What was it, 10 days ago, roughly?
Yeah.
That we had discussed that these things do not happen in accident. It's not by accident that ridiculously big orders are passing through the market at the most liquid times of the day, and especially pre-NFP, which the liquidity is anyhow reduced by default. Of course, in this case, being short, that didn't hurt me at all. But I have to say that this is, this is a sickening behavior, honestly.
Yeah, I think it's going to hurt the guys eventually that are doing it, because retail is going to just say, I quit. I'm not trading this instrument anymore. Yeah.
Anyhow, I'm now out of my silver short, so I didn't even have to take a decision what I'm going to do, because, I got triggered on my 1550 target, and, I'm out of it. And obviously, I'm not recommitting pre-NFPs. There's no point. I mean, I took like, what is it, within 5 trading days, like 6.5% profit. I'm pretty content with that. I'm also now out of
Delio's told you that you could buy it at 14. I heard him. He said he was going to buy it with both hands. Good call, Stel, at $14 silver. You had to react at the speed of light. So
I don't think anybody got filled there.
yeah, all offers. You used to be able to get something called time and sales, where it would show every trade that happened. Remember in the old days? That's how you would check if there was an error on your trade, because it would record every trade. So the guppy made a new high, and
by the way, I sold it.
Okay.
The guppy made a new high, and I sold it.
Okay, and the euro yen's in the zone as well, up yes. Around that 130 level.
Yes, but I actually, okay, there we go. 222, so it's a bit. Let's see the details. 4.4, so unemployment is at 4.4.
Participation rate ticked up.
Canadian employment data came very strong, 4.5 times what was expected actually. So it's also worth seeing what the Canadian will do. Average hourly earnings though 2.5% positive. Oppositely, then the market was expecting at 2.6. So that's you know, a little bit under the estimation, and since, you know, a lot of focus is being given to inflation, perhaps that's going to affect more the dollar initially. To begin with, we're seeing some dollar weakness here.
Raga called it. He said 220. You're getting a pretty negative reversal in U.S. dollar yen up here with the divergence too.
And
right
being
here.
short pound yen doesn't really bother me, I have to say.
Yeah, I think it's a good position.
Yeah, because to be honest, at the moment, I mean, having to do with just having a look at the daily candle at the moment, which of course it's very early, so you know you have to take it with a pinch of salt.
Yeah.
We have a shooting star to begin with after making a new high. So if we actually close negative on the day, that's going to be a key reversal.
Yes. So what I would do, if you're not,
just have a look at the 4-hour chart, because you'll see your favorite pattern.
Yeah, the 3 drive.
Exactly.
But I'm saying for people that aren't short yet, perhaps you get some fib retracement from here to here, maybe just a shade above 47 for an entry. Maybe we get a right shoulder here. But okay. Anyway, the 4-hour looks like a 3 drive.
The fact that we saw the NFPs were strong, the fact that we are seeing a little bit of a tick up in the unemployment is not something negative, because that had to do with a slight increase in participation rate. That's good. I mean,
lower wages, like
a little bit softer than expected, actually. That's probably what's affecting the dollar at the moment. Yeah,
that's a problem. Okay.
Yes, that's the only thing that affects negatively the dollar at the moment, actually.
Yeah. Well, I was going to ask for a raise today, but I guess if the rest of the country can't get a raise, I'll stick with, you know, the disappearing middle class in America. So okay, CAD yen. Just take a look, Steve. I know it's real counterintuitive to do something up here at new highs, but it's not confirming right here. I think it's worth a shot with maybe a 70 pip stop right here. Maybe end up getting some type of reversal.
We are close to a reversal, because now the structure is more complete. But I think that we might even see like another 100 pips to the upside before we do that.
So 89, you think 89's
it is actually likely. You remember that when we were breaking higher, I told very explicitly, like, don't be looking for reversals in the yen pairs. Not yet. Yeah. But now we're getting there. We're getting close. I already see that the pound yen is mature. The euro yen is also decently mature at current levels. So I really do think that the vast majority of the yen crosses are decently close. By the way, let me give another update. I was about to say it, but you said something over me. I also abandoned my Kiwi short because I didn't like yesterday's candle. So I booked another 45, 47 pips profit there, because I honestly don't like the structure that I see.
You can show your charts, buddy. Be easier.
Sure.
I predict this will be, this 1 hour candle might be a reversal candle in Canadian yen.
Let's see.
And if it doesn't work on the 1 hour, I'll go out to the 4.
So by the way, this is the CAD yen, and this is exactly what we were looking yesterday. Sorry, not yesterday, 3 days ago. You see, when we drew that actually 1, 2, 3, 4 days ago. So what I said then is that I expect a little correction, another thrust higher, another correction, another thrust higher. And as you see, we actually got the first part, the little correction. Now we are on this part, the thrust higher. And if that prediction I made, which was 3 steps ahead, so that doesn't mean that it's going to fulfill. We got the first step and the second step already fulfilling, but we don't know for the third and the fourth. Then I would expect to find some kind of a top, a deeper pullback, and then one more high before we get a reversal. So that's what I'm seeing at the moment. And as we drew it 4 days ago, that's the exact same view I have. Of course, this might not end up being here. It might end up being here. That was just a general structure of what I was expecting. It had no measured levels on it.
Definitely the weak performer in the end crosses is the guppy.
Yes, definitely. And let me show you. First of all, we also saw it yesterday with Grega, if you remember. So this is what we're seeing at the moment. Another 1, 2, 3, 4, 5. So I think this is very, very mature actually. And I did some projections before, but unfortunately it was in another computer and I forgot to load the profile. But we can do them together if you want. We've started actually seeing some confluences here. We have, you see here, equality here. Also, let's measure wave 1 and wave 5 for length.
Oh yeah, I see that.
So let's go here and let's measure wave 1, which is this. Right. And what the hell am I doing? I'm measuring another wave.
What the hell are you doing, man?
Yeah, indeed. So this is actually it. Let me.
Stelios, what the hell is Steve doing?
I don't know.
He's a magician. No matter what he touches, it turns into gold. I trust him. No matter, even if he makes mistakes, he still makes.
Okay, and we have an equality of wave 1 and 5 at 130.25. So actually, between 129.75 and 130.25, so roughly within this area of 50 pips, we have some some upside targets. So we don't need this anymore.
Yeah, and then Greg has it completing up there with the possibility for a pullback all the way to 26, I believe, right?
And you know something? Let's also have a look at this possibility. Let's see an extension of this.
Look at what Nick has on Euro Yen as a harmonic.
Oh my God! Look at this. Do you see the red line blinking?
Yeah.
That's a 161.8. Okay, I have to admit I have a good eye. So this is we don't.
You love you.
Sometimes I love me. Okay, so we have also a 161.8 at 129.80. So within 50 pips, we have 3 zones of resistance. I like this. This is a good area. To see a reversal. Okay, so
you put a partial on in case you put a piece on today and add on Monday if it has some follow through.
So Euro Yen has given us no reversal signal yet, but to summarize, if we see in this area reversal signal, I'm going to trust it. You know what I mean? That's what matters. So now I have the confluences that I'm looking for, and what's missing is the trigger, the signal, and the trigger is going to be a very nice candlestick reversal of any kind.
Another trigger that may line it up would be a high in Euro Pound, which we also discussed with Greg yesterday, and I said, could we get one more push towards 89?
And that was initially my view anyhow, because I view this as an ascending wedge. So I had drawn, since we were here like 4 or 5 days ago, I had drawn these 2 alternatives. Alternative 1, a drop immediately from that level. Alternative 2, a rebound to test that, and then a break lower. So obviously this alternative has gone out of the window at the moment. So this is now a viable alternative, perhaps even incrementally new high to take out, whatever, stop losses were created when we saw this nice outside reversal candle, because this was an outside black candle So this was a nice trigger for whoever believed that was the place to be short. That was a good area to be short after they saw that trigger. So if they're keeping their stop losses, let's say at around 0.89, we might see that getting triggered and then plunging lower.
Yeah, and once that starts turning down, that's going to favor the euro yen short over the guppy short.
Definitely.
So, that's something else to keep an eye on. So,
definitely.
Yeah. And the euro still has the euro made a new high? I haven't looked since the NFP. It was putting in a lower high.
If you're talking about the fiber, no, it hasn't. We are currently, as you see, the market is completely flat here. We have a doji at the moment. We came, we came higher, but we didn't surpass the previous high over here. So we retested once again this descending trend line. But the market obviously seems undecided about how to treat the news having to do with the dollar. So we obviously, we obviously need to give it a little bit more time to see what kind of a move we're going to get. Since we didn't get a very strong initial reaction, which very often is a good sign that you should fade it, and whatever kind of reaction we're going to get is going to be a reaction that comes after some thinking, I would probably advise against trying to fade any move that might come from this point forward. So since it wasn't a very fast move that came as a spontaneous response to the news, you would probably be better avoiding fading any move that follows from this point on. That's my 50 cents.
Okay.
And now USD yen is pushing to new highs, by the way. To the highs of the day, this remains strong. There is absolutely no indication that this thing is reversing. As I've said since down there, I maintain a bullish bias to the USD yen, and that's why I was bullish so many yen pairs. And to be honest, we don't have an indication yet. Look at it. It's like it's copying itself over and over again. We get a thrust higher. We get 3-4 days of consolidation, which is textbook consolidation, because look at them. Spinning top, spinning top, spinning top, doji, boom, thrust higher. Then we get a spinning top, a pin bar, another pin bar, thrust higher. Then we get a pin bar, 2 spinning tops, thrust higher. We keep repeating the same type of price action. A big 1-2 day thrust higher, 3-4 days of consolidation, another thrust higher, a few days of consolidation, etc., etc., etc. Until this point, we have not seen any kind of an effort to actually reverse lower. So, being short at the moment or being, negative the USD yen, from what we see at the moment, makes no sense, temporarily at least. If we see something big, if we see a reversal of some kind, we can discuss about it. But from what I'm seeing here, there is absolutely no indication that, a reversal is imminent. Nothing moves in a straight line, but this thing does not seem that it's likely to reverse like anytime soon. We'll see, of course, we'll see. But there's no indication at the moment, so until we see something like that, I remain positive. Let's have a look at USD CAD, because I'm guessing that it's probably currently producing
new lows.
New lows, yes, because that was a really strong print. Yep. No, actually, it did register a new low. Yes.
Between here and 131 LE, and Dan Norbert's been long, took your advice, but he does his own thing. He's been long CAD yen.
Now the only hope here is if we end up getting something like this. That's the only hope for a reversal.
Yeah.
That's, from what we see here, the only hope of a reversal, to get something like this.
Mm-hmm. This is the data.
Yeah.
Because you are getting some divergence on daily. I wonder what the 1 hour looks like.
We can have a look at the 4 hour if you want.
Okay.
Let's go. Oh, by the way, since I see it here, I issued an alert when oil was actually plunging, when we were somewhere here a few hours ago, that I wrote the exact following thing, that we might be seeing weakness in oil, but we have two levels to watch out for a rebound, and they are the 44 level because it's the 61.8, and the 43.72 level because it's the equality of those two legs. And as you see, we rebounded exactly from the 61.8, exactly.
Yeah, nice eye.
So we need to see what happens from here. But to begin with, the fact that we rebounded from here is positive. But obviously, we need to see some strong reaction to then register this as a correction and to see the scenario of another move higher towards this channel again play out. Okay, let's go to USD CAD now and see that in the microscope, as we say.
Yeah, I made a marginal new low. Yeah, it's diverging pretty good.
Yeah, here it's diverging actually pretty
glaring.
Pretty glaring divergence indeed.
I mean, it's not a reversal signal, but at the minimum, it's a reason not to be short anymore.
Yeah, but it's not a reversal signal yet. It's not.
For now.
I mean, it looked like it might be a wedge, but here we see that we're far away from that, because if you look at it at the 4 hour, it looks more like a megaphone, for example, in the forming. But you know, we need more price action here to judge. To be honest, we are now just trying to find excuses of why it should rebound. But let's be honest, besides trying to find excuses of why this might rebound, we currently can say one thing. Until proven otherwise, as we've said many times, this thing remains bearish. End of story. I mean, I understand that.
I mean, if I look for a reason, it would most likely be that the dollar holds support, and we still have that, you know, there was some bullish views on the Dixie early in the week, and we had this pullback. We're still holding those lows, so, you know, that's a reason.
Yes, sure, but, you know, until proven otherwise, you know, this thing remains bearish. USD NOK, by the way, since we saw things that are correlated, is still chopping around here below this zone. I remain short. I'm absolutely happy with it as long as we don't close above this zone. I mean, this looks to me more like a bearish consolidation, so I'm still expecting possibly another move lower. Now let's have a look at the DXY, since you mentioned it, and now it's been some time since the print. As you see, there is nothing new here. We have a spinning top. No, actually, it's an inverted hammer for the time being. Anyhow, pin bars are unreliable. What we know for sure is that yesterday's candle was very bearish. The fact that we didn't even manage to scale the first resistance that was inside, which was 96.50, is definitely something bearish. I mean, usually you have some resistance zones, and at a rebound, you will at least, you know, scale a couple of them, one, two of them. But, you know, for the time being, every time we've seen a consolidation, the dollar index has just failed to cross any significant level every time. Here, for example, we registered a double top. We didn't even manage to cross above it. I mean, yeah, we did, but intraday only. This time we rebounded, first resistance failed again. So, you know, a lot of reasons that somebody could be expecting a bounce. I mean, having to do fundamentally, saying about that, you know, they're hiking rates, blah, 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 etc. But from a technical perspective, where is it? Where's the strength? There's nothing. There's nothing. I mean, it's like, you know, it's like a balloon that doesn't have air in it. I mean, its inability to bounce is glaring. You know, we cannot just ignore that. If we see something different, sure, we can have another discussion. But to begin with, I see nothing that tells me, oh yeah, you know, this thing is about to bounce. This morning star here was a promise this morning star formation on the daily was a promise, but you know, it has completely failed to materialize. So it was just like a firecracker, nothing more than that. USD CAD we cover. We have our friend who is asking, let me see. Ali is asking about Euro Yen. Yes, indeed, we covered that. We briefly, just to give you a summation, very briefly, we said that there is a very nice confluence of resistances around current levels between 129.70 and 130.25. So if we see a rejection within this 50 pip zone, then I'm going to tend, if we see a candlestick rejection and the reversal, I'm going to tend to trust it. That's what we said. Now for details, of course, you can always, you know, revisit the recording of the webinar. USD, by the way, USD the Swissy, as you see, has the exact same picture as the DXY has. An attempt to rebound and then a failure. So, you know, nothing else to say here. EuroCAD looking a better short. Okay, since you're mentioning EuroCAD, I'm still short the EuroCAD, but we had a couple of day rebound. As long as we stay, you know, below the retest of this zone, I'm fine. I'm short since up here. I'm maintaining my short position. I'm hoping for EuroCAD that it's going to provide at least one more leg lower here, so it can actually fill the gap and fulfill an ABC target. So I remain short, hoping that we're going to see the 144s.
You've been riding that one nicely.
Yeah, that was you know, that was a nice trade because actually I never found myself out of the money. I mean, from the point of entry, I was since minute one in the money, and you know, that's a trade like that always makes you feel very, very comfortable. I mean, you know, you can manage it without any stress whatsoever. I mean, those are the best kind of trades you can find yourself. But let's have a look at the Aussie and the Kiwi, because a friend here asked, listen, one thing for the Aussie is that we're rebounding from a zone that I had already indicated as a possible rebound zone. Obviously, the move lower in the Aussie USD is stronger than the one we saw in the Kiwi. That's why I took profits on the Kiwi. And to be honest, even though the Aussie USD dropped, you know, 4 days in a row, I'm still not convinced from the price action that this is, you know, this is a strong reversal or whatever. So, you know, I need to see more price action. I don't think they're clear yet. Look at the Kiwi as well. I mean, this was a nice wedge. I would expect that a drop below it would lead to an acceleration. But look at this. 1, 2, 3 daily candles in a row that have long lower wick. What that means is that every time that we were displaying that, you know, an effort to actually accelerate lower, there were enough buyers emerging to actually push it higher again. And this is not the price action that inspires me to be short. So I took profits for a second time, like 45, 47 pips, whatever it was. And, you know, I'm going to wait for more confirmation before I re-enter short, if I do. Anyhow, I'm lucky to come out, you know, even with some profits, because, you know, I prefer to enter trades that, you know, start working out immediately or show, you know, immediately a potential, but this one hasn't yet. USD CAD we already covered. Prior earnings revised down to 0.1 from 0.2. Says Kimster. Yes, thank you. That's a good point. Euro Kiwi and Euro Aussie. Yes, let's have a look at that. I remain long, by the way. Oops. Opened it in the wrong chart. Okay, here we go. So I remain long, although I'm cautious here. Why? because this was my initial target and we actually reached it. And to be honest, according to how it closes today, I'm probably going to take half my position off, take profits on half my position. I'm long since here, almost 148, a little bit lower. So it's already more than 200 pips in the money. There is a good likelihood that I'm going to take profits in half of my position, and I'll see what I'm going to do with the other half. Because, you know, this is a zone of interest and I already see a reaction, so there's no reason to risk it. Now, having to do with Euro Kiwi, I expect at least one more leg higher. My initial target was 158. I remain long, and as long as we remain above this little consolidative triangle, I'm absolutely happy with that as well. So I'm decently positive on both of them. Although, as I said, Euro-Aussie, this is not a place to establish fresh longs. Let's first see if it can scale that area, and then we can discuss about it again. By the way, the USD ruble resumes to new highs. Actually did register new highs today. So, you know, I would start being cautious about it because we might see, you know, a stronger pullback. So you need to be a little bit careful with that. USD-TRY as well, today's candle is definitely not very bullish. So I wouldn't exclude the possibility of a move lower, a retest, and then a move higher. Just letting you know, since, you know, we've talked about them plenty of times.
Can you answer Maria's question?
Of course, let me see it first. Yes, Maria. As I told you, we don't post all our personal trades on ForexAnalytix. We make a selection. For example, we don't cover Euro-Aussie, we don't cover Pound-Aussie, we don't cover Pound-Kiwi, we don't cover Euro-Kiwi. Those trades we were very comfortable about because, and that proves from the fact that we actually made a blog about them. So if we cover those pairs on ForexAnalytix, we would have made patterns in play for those. But now having to do with being short the Kiwi, for example, that was a trade that I only took 40 pips from. So, you know, as I told you, we filter our signals and keep the ones that have the highest possibility of actually playing out, so we can, you know, achieve the best possible results. That's why we also mention quite a lot here the pairs that we don't cover in ForexAnalytix, like the Euro and the Pound crosses. So, and that's why we also make blogs about them. We don't cover them, so if we don't cover them, we cannot make a pattern in play on them, since, you know, the system doesn't permit that. That's why we, you know, we post free blog posts about them. V says 114 in USD yen coming soon. As you heard me saying before, I absolutely am of the opinion that it remains bullish, so there's no surprise there. Here it is. We're just a few pips away. And the next target is obviously this high, the 114.40 area. And then the next area of interest that I have is at 115.80. So I would expect that if we scale 114.40, we should at least move another 140 pips to test this area before perhaps seeing some kind of a pullback. But I still remain positive. So, for example, something like this or whatever. But yes, I have no reason to be bearish at the moment. I had no reason to be bearish before. I mean, we've said that time and time again.
Hello, Michael.
Michael is asking about dollar yen. Yes, we just had a look at it. Okay, so
Maria, in all fairness, Steve, many times, I'd say at least 90% of the time, does announce the position he's taking during these webinars. It may seem like they're 100 pips away because
I've mentioned them another day, yes. Yeah. And not only that, Maria, I'm usually calling positions I'm going to enter before I even enter them. I say in which zone I'm going to enter a position very often, more often than not actually. If you go back to the recordings of the webinars, you can find plenty of those. Dale, by the way, do we have a guest today?
Yeah, Norm Winsky has some Planet stuff he wants to share. So
okay, and when have you planned?
In a half an hour.
Okay, in a half an hour. Okay, so what other questions do we have? What would you like us to see, guys and girls? Okay, the pound. Yeah, actually, good that you mentioned it because the pound has been moving after the weak UK data. It has been moving. Okay, I can tell you one thing. The pound is displaying weakness today. There's no question about it. But would that make me be bearish at this very moment? Not yet. Because this might simply be an ABC lower. So I also wrote it to the analysis like a couple of days ago and again. As long as this zone holds, so as long as we remain roughly above 128, I cannot turn bearish the pound. So it's obviously kind of perplexed at the moment. Although the correction lower was textbook, we came and tested the exact zone that we were expecting that we would test, and then we rebounded. To be honest, the rebound was stronger than I would expect. I expected the move lower. I didn't expect the strength of the move higher. But for the time being, I don't think that what we're seeing here is enough to turn us bearish, because we can easily perhaps see at least one more move higher. If we find a low above 128, then another move higher towards 131, 132 is likely.
That spike in the euro did not take out the high from last week. Missed it by about 5 pips.
Yes, it
looks
not.
like it's rolling over. And also, if you just take a look at the 1 hour now on euro yen, besides being in Grega's zone and Nick's zone, you do have a little 1, 2, 3 right now.
Let's have a look at it.
On the 1 hour chart at the highs at 130. So,
Steve, can I add one thing before you do that on the pound? I just want to say, I know it's a month away, so it's not very close, but we just have to keep in mind with the pound that inflation report months, which is February, May, August, November, are usually when they change their inflation forecasts, etc., and that's when they usually make the big decisions. So when I'm not saying they're going to start the hiking cycle or cutting cycle, but when they do something, usually they time it with the inflation report months. So just something that came to my mind.
So you mean it's a bigger likelihood that, for example, if they want to make a hike and reverse the
August cut,
the Brexit rate cut that they did preemptively.
Yes.
This might be a good opportunity.
Just something to keep in mind, because historically for years, any forward or anything like that that's right after these inflation report dates in these months always have a premium or an inverse premium, depending on what the market's pricing that they're going to do. So there's always a slightly bigger chance of them doing something on those months. Just something as information.
That's a good piece of information, Stelio. Thank you. So yes, a bigger likelihood that we've already seen a hawkish shift in the members of the committee. So perhaps they're going to give us one hike in this meeting. Perhaps we'll see. Even if they don't, actually, we will also need to monitor, how the balance between the hawks and the doves is going to actually shift.
Yes, I just remember that inflation is staying quite stubbornly high. I know the economy is not doing great.
And the pound weakness. I mean, this pound. I'm not talking in the very short term for the friends that are watching here. I'm talking about in the longer term that we've seen, like this pound weakness. Of course, is not helping with inflation. There's no question about it, because The UK has a negative trade balance, and obviously when you're importing more than you're exporting with a weak currency, of course that's going to bring inflationary pressures. There is a friend that's asking here about the euro and the pound crosses. We already saw the euro crosses, euro Aussie, euro Kiwi crease. So if you didn't see those, you can see the recording right after. But we didn't see the pound crosses, so we will likely do that now. Okay, what worries me here is the following. That was our first target in the pound Aussie, and we're seeing a huge reversal from it. So good news, we reached our first target. Bad news, we're seeing a very big reaction from it. Now, having to do with the pound Kiwi, in essence, what we have here is a double top and a very big candle here. So, we need to monitor those. I don't like these candles. I really don't. Of course, that doesn't mean that that's it, they're turning bearish, but I mean, for example, that if you were long the pound Aussie from the inverted head and shoulders formation, your first goal was achieved. It would have been good if you took some profits here, and you need to monitor what's going to happen from here. And pound Kiwi, gave us less of an upside, and it has currently stalled, and today's candle is quite aggressive. So let's see how they're going to close. Perhaps
I agree, Matij. I agree. Yeah, Euro yen 4 hour, yeah. And the 1 hour classic. So if you took me seriously, you're already up 10, 15 pips. So yeah, Euro itself looks negative too. I know that Greg is still negative.
Yeah, let's go back to the 4 hour chart then.
Of what?
Of the Euro yen, since you mentioned.
Okay. Well, yep. The 1 hour shows the 3 drive.
No, the 4 hour is fine as well. Look at it. This okay. In essence in the 4 hour.
Okay. Yeah, even disagree with me on a time frame. So the 1 hour shows within the last few hours a very classic 3 drive.
Okay. Yes, so I see it. 1, 2, 3. And actually, if you see, Dale, both the 1 hour chart here and the 4 hour chart, let's go to it, gave us some very nice outside candles. And if you see here on the 4 hour chart, we have a follow through to this outside candle. So I would tell you in essence that probably a 4 hour close below the 129.70, which is the low of this outside candle, is going to be another indication that this thing is reversing.
Yeah.
And as you see, this was also, the wave count that we already had up since days, which is a 1, 2, 3, 4, and a 5. Okay, so as we said just a while ago when it was in the highs, we would like to see reversal indications anywhere between 129.70 and 130.30, and we do see. Personally, I rarely take action on a 4 hour chart. I'd rather lose a few pips and take my action on a daily close. So that's what I'm going to wait for. But I can tell you that it's definitely a good start. There's no question about it. Okay, we have more questions.
Hi, Ziggy. Hi, Zig. William Whitelaw, Windsor 99. How's everyone doing? Everyone have a good week?
Aussie Kiwi.
I want to thank everyone who's had an interest in being at our webinars. We've now reached over 1,500 registrants for our webinars.
And by the way, I need to say that kudos to Grega. He was short the Euro USD. He has a Euro USD pattern in play, and he stuck with it through the NFPs because he was quite confident about it. Let me see questions. Yeah, Kiwi Yen and Aussie Kiwi. Let's have a look at them. Aussie Kiwi. Oh my God, you guys, I know you're doing that on purpose. Okay,
Right.
Nothing has changed. Chopping around, chopping around, chopping around.
Right
The only
shoulder.
thing I see here is we had talked about with Dale that the only bullish scenario that I would be seeing here, because otherwise I would tend to be negative on it, the only bullish possibility would be to reverse higher and make a shoulder here.
Or
Because
get a
then,
third drive to 350.
because then somebody will be able to say that we have a shoulder, a head, a shoulder, and here is the neckline. Okay, so the only bullish scenario on the table is this, and then a move higher from here. That's it. So the fact that we're rebounding from this zone is positive, but would that make me be long? Yeah, sure. If you want to put a tight stop loss above, what is it? Below 137. Sure, the risk reward is with you. Why not? You could perhaps get even just another retest of 1054, which is up here. The risk reward is there. But the longer term bullish scenario is to actually get another shoulder of an inverted head and shoulders formation. Then if we get to this point, and that's what we've done, then I'm going to be able to tell you that yes, now we actually see a valid bottoming pattern, and a break of the neckline should lead to the next zone, which is at around 1075. Okay. Kiwi yen you asked also for, so let's have a look at it. Okay, this is what we had. We had a triangle. I had drawn that actually back then, that I'm expecting another fifth leg higher and then a move lower. Obviously we got another little correction, so another thrust higher. This is mature. This is a very mature uptrend. So what should I tell you? That you should maintain a bullish bias? Probably you shouldn't. Obviously, any kind of rejection from this zone is going to be a great opportunity to at least scalp for a decent correction, because this move is already from 76 roughly to, okay, this is going to be a 700 pip move. So if you see a rejection from anywhere between 83.20 and 83.80, it should at least bring you back to this zone, at least. So any rejection from there will give you a nice risk reward, because you might see a correction that's going to take you down to here, but you could easily also see a correction that's going to be deeper and take you to this zone. So the risk reward is going to be good. So, I warned here that you shouldn't be short and you shouldn't be expecting a reversal. To be honest, I expected that the thrust higher is going to be less than what we got. But getting more than what we expected is not a bad thing if you're expecting a reversal, as I said, because probably that's going to yield a deeper correction as well. So this is also something that you could hold in your radar. We had a double top here. Why not? Perhaps we're going to make it a triple top, or at least temporarily.
Everyone, mark your calendars. August 4th, Chris Laurie will be here. And he doesn't do many interviews anymore. He's a legend in the FX arena. So mark that down on your calendar. Chris Laurie, the FX legend, will be here on August 4th. And next week, actually, another legend, Raul Paul. Raul is interviewed on CNBC quite a bit. And I'm looking forward to talking to Raul because he's a under parity bear. I want to see what he's thinking with the euro now, so that should be a great interview too. But I've been trying to get Chris Laurie to do an interview with me for a few years, and we got him here at ForexAnalytix in early August, August 4th to be exact.
And this is a very nice hold up of the 44 level. We've already rebounded 70 cents. So that's what we expected. It went a little bit deeper. It went to there, but it's okay. So now it remains to be seen if we're going to get the other part, which is this move to perhaps test this channel and the 61.8, or perhaps a little bit higher to test the critical 49 level zone. I know that Nick has a target a little bit higher, but to be honest, personally, I would be surprised to see the move surpass 49. But you know, I mean, there's no point to discuss it yet because we haven't even seen the rebound. But I'm really saying that I really like to see another leg higher in crude. I only know Dale the legend. Yes, Maria, we can cover Aussie Yen. Actually, I was about to show it. Listen, Aussie Yen behaved very well because we had indicated this is a zone of interest, and on the move lower, we actually found support here 3 consecutive days, and today we're actually moving higher. We have to stress out that we do have a divergence with Kiwi Yen because we just had a look at the Kiwi Yen chart, and as you saw, that was parabolic. So it has already given us a new high, while Aussie Yen has not. And another way to time sometimes trade in correlated assets is that, for example, let's say, now this is an assumption, okay? I'm not saying this is going to happen, but let's say that you see a reversal here without making a new high in the Aussie Yen. That's going to be a nice indication to time the reversal in Kiwi Yen as well, because you're going to have a divergence. You won't have a fresh high here, while you're going to have a fresh high in the Kiwi Yen. So that's something that between correlated pairs, I tend to notice, and if and when I notice something like that, I pay attention to it. Although I have to tell you that my main thesis is that most probably, to be complete, the Aussie Yen will probably give us a new high as well before reversing. So I would expect most likely another high in the Aussie Yen before at least seeing a reversal lower.
If you're lonely when you're trading and you're looking for a good place, come on, click that registration link and hang out with us in the face. Say you're living at home in the basement with mom, but you dream of owning your own house. Well, I suggest you hang out with us in face, then go ahead and click your mouse. F-A-C-E, face is the place. Yeah.
Woohoo! Woohoo! Right. We love you, Dale.
By the way, I need to say something about pound CAD. We had the possibility here of an ABC, but that's gone now because this was another correction, and it was an obvious correction, an ABC, and now we're moving lower. So there is a chance that this is an impulsive move, in which case I would expect a test of 163, which also coincides with these lows here. So nobody asked currently about pound CAD, but I decided to have another look at it. And I would say that in pound CAD, this is now a likely scenario.
Thanks for giving me time to sing, Steve.
Oh, it's my pleasure to hear you sing, actually. I have to say that it's one of the highlights of the webinar, mate. And you see, straight to iTunes, very good, bravo. Where's the applause button? How do you know?
Kevin was?
Kevin says, how did you know I'm living in my mom's basement?
We're going to get you out of there, Kevin. We're going to get you out of there.
Let's have a look at
At least get your mom to give you a bedroom. We'll get you out of there.
Okay, USD-MXN. We got a tweezer top yesterday. If I remember, we wrote in analysis that might indicate a correction lower. So something like this, definitely not out of the question. Even it can go even as deep as this, but I remain constructive. Unless we see this zone getting cleaned, I remain constructive. So this is the case with USD-MXN. I remain constructive, and obviously I remain long as well. I mean, especially when we write blog posts, and we wrote the blog post the day that actually this was breaking to the upside. Obviously, you know, we like to put our money where our mouth is. So, you know, and we will probably, at a retest of this, we will probably also personally, at least, because I know most of us like it, I'm going to personally probably even going to add to my position. So at a retest of lower levels, I will gladly add to my position as well, because then I will have a great risk reward. And, you know, we'll see. The trade is here. I think the trading setup is excellent. That's all that you can expect from any trading setup. As we've said plenty of times, trying to catch reversals as we managed to do up here with the blog post we wrote on the 22nd of the month here. We warned that the USD/MXN might be reversing for good, and look what we got. This time we're trying to predict that it's actually going to do the opposite. Trying to time reversals is not an easy job to do, but you have one thing going for you, that you get an amazing risk reward. So you have the ability to be wrong even more than 50% of the times and still make good money, because if your risk reward is 5 to 1, 6 to 1, 10 to 1, you can even be right like 25% of the times and still make good money. But you need to have the guts to take these kind of trades, and you need to be patient and not to lose your self-confidence just because you got 2 or 3 stopped out in a row. This can happen in this kind of trades. This can happen. You can easily get 2 or 3 stopped out in a row. For example, and this is a good pitch, so we can go to the indices because people are asking. Before I actually managed to make a good profit in the Nasdaq being short, I had made 2 attempts. In one, I got in the money immediately, and then I lost all my profits. I got stopped out at 0 profit. And in the other one, I had a little stop loss. But then, you know, third time I tried to time it because I knew that we were close to some kind of a top, at least a corrective one. You know, I made back multiple times what I could have lost. But you need to be patient and you need to have a game plan. The game plan is not just it's overbought, I should short it, because it was overbought here as well. It was overbought here as well. It's, for me, it's all about confluences. Confluences of levels and then a trigger. That's what you need. Bill, we did cover USD CAD. Just to give you a 5-second summation, we said that there is a possibility that perhaps something is brewing like an ending diagonal there or whatever, but the likely scenario remains that it's going to move lower because, let's be honest, it currently, let's go to it, it currently shows no real willingness to reverse. You see it? I mean, even this move, this consolidation was so weak, so weak. So we said there is a little potential for something like that, but this is not the main scenario. The main scenario, until proven otherwise, is a continuation lower to the next zone. The next zone is at 27.90, by the way. So obviously the main scenario is this. Let me see what questions we did not cover. Euronoc. We did not cover this one. Okay, Euronoc. We had seen it a few days ago, and we said that this is a very nice setup. Actually, Dale also made the comment that it looks a lot like EuroCAD, which Maria EuroCAD, for example, I shorted, if I remember right, live on the webinar. Since you asked before, we were monitoring an equivalent ascending wedge in EuroCAD. We had the same kind of structure moving higher, and we said that there are 2 scenarios here. Perhaps we're going to see another retest of the wedge, or we're going to see a plunge lower. None of that happened, but we haven't had a new high, so the 2 scenarios remain. at any given time that we break this ascending trend line, which is the wedge support, I'm going to go short. If we get the retest of the highs and I see rejection, I might actually even short it from higher because the risk reward is going to be good. Let's hope that I will remember to check it because, I'm not going to lie. It's not that I'm checking all pairs like every day. So if any of you, if I miss it and then if you see this plans through or retest it, please let me know in case I've missed it because I really want to participate with this. I really like this setup. I think it's very clean as the EuroCAD one was, and I think it's the risk reward is here to attempt a short in either case A or case B. Okay, so EuroNOK remains interesting, but I wouldn't short it right here, right now. Europound. We actually covered that. I'm going to briefly take you to that because we already saw it and you can see it in the recording. What we said here with Dale is that there is a possibility for another high. We had said it actually since days ago from where you see the line drawn. We had said, two alternatives. One is going directly down. Now I deleted this today because obviously it didn't happen. And another possibility is another retest of the wedge. That's also a 3-drive formation as Dale likes them very much. So that would also probably produce a nice trading opportunity. Of course, always in the assumption that you see a trigger. So for example, if I saw a huge candle penetrate through this, with volume and strength, I wouldn't be shorting just because it touched it. I would want to see a touch, like a daily candle that shows me that it's reversing, and then I would be involved with it. Gold, yes, gold and silver. Silver we did cover actually through Dale's chart, but we didn't see it through my chart. So let's go ahead and have a look. Okay, nothing has changed with gold. We said plenty of times, and this is what I had drawn here, that this thing is since we broke below here, what I said yesterday or the day before is that at maximum I see a retest, and if I remember actually in the analysis I wrote that as long as we remain below 1,240 there is no reason not to be bearish. And as you see, we didn't even actually get to that. We didn't even actually retest the broken trend line. We just consolidated higher a couple of days and boom, that's it. We're already to new lows. We're currently testing this low. So obviously, another move lower to, I would say at least 1,180 is more likely than not. Now, having to do with silver, we said that this flash crash was ridiculous. It actually triggered my my profit target. We had taken a short here. I said live on the webinar that we were in this doji. I said that any day we penetrate 1650, I'm going short because this was a textbook bear flag. That's what we got. And as it seems, obviously this was a ridiculous flash crash, but as it seems, regardless of the flash crash, silver does not want to recover. I will completely ignore this week because, as I said, this is a ridiculous price action. But even by ignoring the week completely, let's just say that it never happened, and by judging today's candle without taking the week into account, it's still another bearish candle after a consolidation that didn't even manage to produce a pullback. I mean, what did we get? We got like one spinning top and one pin bar of consolidation. I mean, these are the kind of consolidations that you see in very weak instruments. Any reason to be long? I see none at the moment. None whatsoever.
Maybe there's one more flash crash to come. We've got two. And last time, let me ask you this, Steve. Last time I brought it up to Blake that sometimes those spikes are omen prints, meaning that eventually they're going to go there.
And that's what happened. Yeah.
Yeah. Do you think that could happen again, that we could test the low of this flash crash, take it out?
Yes.
Because if you measure it like from 1580 to 1650, like kind of that rectangle you have there. That's what, $170. That's going to take it to 14.
There, you see?
Yeah.
For example, this might happen.
Yeah. Move sideways and it pukes one more time like that.
Yes.
Yeah. Okay.
Yes, this might happen.
Anyway, we have Norm in the house.
Okay, perfect.
Thanks for your review.
Yeah, my pleasure as always.
We covered everything.
Oh yeah. Yes, he's right. Give me a few seconds because they asked since a long time ago and I totally forget.
Oh, okay. Sure.
S&P, I mentioned it to begin with. If you look, I've also posted it on ForexAnalytix yesterday. If you look at the 4-hour and the 1-hour chart, there is not a pretty one, but there is an head and shoulders formation with a neckline at 2,414. That leads to 2,377, but that's a weak signal. What I can tell you as a fact is that we are dripping lower, but unless I see a close below 2,400, there's no game on. You know what I mean? So yeah, all that is nice. We're dripping lower, etc., etc., etc. We had an ascending wedge. We broke below it, but where's the acceleration? Where's the impulsiveness of the move? There is none yet. So especially until I see a break, a decisive break and the close below 2,400, I have no reason to be really bearish. Okay, thank you. Everybody have a lovely weekend. Have a nice interview, Dale. And, we'll be here again on Monday, as always, for more questions and to see how the markets move. Bye-bye.
Thanks, Steve. Okay, Norm, I'm making you the presenter. Should hear your voice and hope you remember how to share your screen.
Okay.
How are you today, Norm?
Can you hear me okay, Dale?
I can.
Hello?
I can hear you. I can hear you, and I see your notes up. So before you get started, your June 16 review, that GAN number 55 times 55, it ended up being the high of the move.
I know it's a high.
It inverted. You were looking for a low. It turned out to be a high. You always allow for things to invert.
Absolutely. But I don't know that I was looking for a low there. I don't remember that. But,
well, it says it right there.
Anyway, maybe we should go through the little formalities here, saying good morning, Dale. Nice. Thanks for having me on your show.
You're very welcome, Norm Winsky.
Right out. You might want to did you tell the folks who I am?
Norm is a guy who lives in Florida, who looks up at the sky and has been looking up at the sky for about 120 years, and was the original member on the Chicago Board of Trade when they traded wheat. Now, I'm kidding. Norm's a former options trader on SIBO. He's been doing astrological work since college. I've interviewed Norm probably 10 times in the last few years, and I pay attention to his dates for potential inflection points in the market. And he's someone that if you have an interest in this type of methodology, and a lot of people they do pay attention to planetary aspects, etc. Norm is a great teacher. So how was that?
That's pretty good, Dale. Let me just help a little bit. I've been studying the markets for over 50 years. I'm 66. I started studying the markets when I was 15, and I went off to college and I started investing and trading while I was in college, successfully making money, and used that money in 1975 to buy one of the early seats on the CBOE when it was a new exchange. Then I ran out of college there. I went to the CBOE, became a market maker, floor trader on the floor there, and did that for 12 years. And in the during that time, I also I was on the Board of Trade too.
Okay, buddy.
So I got a little bit of experience. I studied GAN and Astro, and Mr. GAN was an astrologer. If your folks don't know who Mr. GAN is, they should, because he was probably the greatest market technician of the 20th century. And he was also an astrologer. That was his main thing, and then he used all these other techniques to fine-tune his trades.
What most
Okay,
people
I'm
know
gonna
about
review.
Gann is that he considered time more important than price.
Absolutely. I mean, just think about price. Is a price a high price or a low price? You don't know without time.
Exactly.
It's all relative to time. All right, I'm just going to review real quick. I was on here back on, I think, the 16th of June, and I mentioned some dates here for different markets, and we'll just go over that real quick here. Here's the stock market. This stuff is right out of my, as you know, Dale, right out of my July letter. Every month I review the previous month's results, show the forecast, show what happened. And so as you mentioned here, my market math, we had the 55 squared is 3,025 days from the major March 6, 2009 low. That came out the Saturday, June the 17th, and the next day, the first trading day after that, Monday the 19th, has been the high. That was pretty good. Also had some other things going on there. Well, let's look at those here. And I had on my Dow Jones model, that's astrological analysis of turning points for the Dow Jones in the past. The way I get the results is I mark them right on the S&P chart. You might know this guy, Dale. He recently got into stocks.
He got where?
That's a little humor there. He got into stocks. You see that? The stocks.
Oh, yeah, the stockade, yeah. Yeah, we'll let him out.
They called it stocks, actually. Back in the old days, you know.
We'll free him.
What's that?
We'll free him later.
There you go. Okay, so there you go. A D is Dow Jones, and Arrow's Astro. F is for I have Fibonacci time cycles. And so those things all lined up, and amazing to me, Dale, I have seldom been able to do this, but I hit 100%, 13 out of 13 timing dates, and they were all good.
Congratulations.
What do I call good? When you can you get to the top of the channel like there, and if you go short, I think you have an opportunity to make money. If you buy on a pullback into one of my dates here, it reverses and goes up, and then you can make money. Here's HOM. This is the high of the month right there. That was my, I think that's got to be the 19th, June 19th, you know.
Right.
Okay.
Right before the solstice.
All right, now we're going to move ahead here. Look at, here I have if you know what Bradley is, Dale.
Yes.
Bradley model it came up with the idea of quantifying the planetary movements and relationships, and then plotting them on a graph, and then you can forecast the market. Here's my version of that. And so I was looking for that blue line was the forecast done weeks in advance. I was looking for a mid-month high and then down. And so it was off at about a day or so. Okay, and if you fine-tune it with my other stuff there, then we land on Monday the 19th. Here's the biggest planetary events of the month. I like when my top thing is when the planets go what's called direct or retrograde. They stop momentarily due to the relative motion of the Earth. They don't physically do that, but on a relative motion basis, they do that. If you look out in the sky from Earth here, they look like they stop their motion in reverse direction, and that when the planets change trend, the markets change trend. Right? This was the 9th when it was also a full moon. You'll see how that affected some of the other markets. And that's the day the NASDAQ died. Remember that?
Yes, that was when
NASDAQ had its blow off top, and it's never been the same since.
Yeah.
That was when Jupiter turned direct.
Good point.
Yep. And over here
we have... You ever hear the expression, when the troops retreat, the generals will get slaughtered?
Absolutely. You know, that's one of the things we watch. One of the things that differ the stock market analysis from probably all the other markets is because the stock market has so many layers. You know, you have all this different analysis, and you can look at like you said, when the troops stay in the barracks and the generals go out to charge on the battlefield, they don't have much support. It's not going to be a good outcome, you know.
So it is kind of bearish, and NASDAQ's leading the way because I call them the troops. I
call that the bubble index.
Oh, okay.
You notice at the big extremes, who's leading the lemmings off the cliff? It's the NASDAQ, you know, right?
Yeah.
Yeah, that's how I say it. I thought when they were going crazy there with the so-called FANG stocks at the top, that was a sign that we were getting close to the end, you know?
Yeah.
Crazy valuations, you know. Generally near the top there in June, we were at value. The only thing more overvalued than we were was 2000, you know?
Yeah, when anything that had a .com after it just went
Yeah,
up.
just in terms of, you know, your price earnings ratios, valuations, we were very, very frothy, you know? Anyway, so that was my stock market forecast for June. Move ahead here. Here's T-bonds. And I had these dates here, and I think I was on here right around the middle of the month, and so we have a big cluster right around the middle of the month. Let's see what happened. Well, here's my green arrows here for the Astro points, and guess what? Right there, that would probably been the about the 15th, I guess, 14th,
Yeah.
15th.
You
That was
nailed
the
it.
low of the month. Okay?
Yeah. And then the high you got.
And I got the high of the month, too, later on. Okay? So, you know, stuff works pretty well. Here's the dollar. Much to my surprise, when I add up all my numbers for June through the first half of the year, my dollar forecast, I had the highest batting average of any of the markets I was doing, and I put more time in the stock market than anything. So I was surprised when I was doing better on the dollar than the stock market, you know. So anyway, here's the dollar. I know everybody out there is currency folks and likes the dollar. Look at, we had that low there. This is a miss, that little red arrow, believe it or not. I missed one. We'll pull back there. That was a date, and that was a good one. And then we had a couple of double 2 days right together there. It was a little topping area and so forth. And then we had a breakdown of the channel there. That was also one of my dates. Oh, right, up there. Yeah, up there. Okay. Now, here, I'm going to show you something real simple. Well, let's see. We have here's soybeans on page 4. And I had just, this is real simple. I have 3 dates. I believe this is near the full moon. No, the full moon was back on the 9th. I take that back. This is another date. This is probably some other things for beans. Mercury is a big deal with soybeans. Anyway, so I had 3 dates, and I hit them all. I hit the high of the month there. And look at this. All the grains, if you've been watching the grains last few weeks, Dale, they all made a low. On Friday, June 23rd, I tell in my letter there, as you know, I have a section there just for grains, and it says that always watch the lunar cycle, the full moon, new moon.
Yeah, you've talked to them personally about it. What lit them up? A crop report?
No, what made them make a low there was a new moon.
No, I mean the big update. The big update we had.
I don't know. Some news. Who cares? All you got to do is.
Good answer. All right.
If you look at that stuff, you're just going to get
spoken by a true technician. Who cares?
Yeah, I mean, you know, really, if you have these timing here, and you know, oh, the market's coming down in the new moon, you just buy it, you know, and that's it. And then it goes up, and then we're getting ready for a full moon this weekend. That's one of the reasons I wanted eager to get on your show here and tell the folks that we're coming to full moon. A lot of these markets could have turns here over the weekend into Monday morning, you know. Okay. So we have a full moon this weekend, okay? Here's crude oil. I was talking about crude oil when I was last on your show, and I had a big event then, and for some reason, I usually have a high batting average. I actually missed one here. Neptune was a big deal. It was a big deal for crude oil, and it was doing its thing, and the crude oil continued lower. I thought we might get a bounce off of that, but we didn't. So I only hit 2 out of 3 on the crude oil.
Yes. Okay.
All right, looking ahead here now. Here's what's that again?
No one's perfect.
Yes, sir. So looking ahead here now, one of the things I do is I cover about almost 30 markets in my letter. And so then when I get all the stuff lined up, I get to add up all the planetary astrological energy for all the different markets for the month and then rank them so that we don't end up trading something that's sleeping. We want to take you where the action is, you know? Right? So number 1, stocks. Number 2, U.S. dollar. 3, T-bonds, so forth. So I'm going to only talk about the top market, you know, take a sampling of these top markets here, you know, the top 8 spots. So here's the stock market as of last night. We got down to the last line of support here is I think about the 2404 level, and now we're moving up because I guess I only knew this because I just talked to somebody a little while ago, and they had I guess they like the non-farm, whatever that is, the labor thing, you know.
Oh yeah.
Whatever. So you know, so that'll be forgotten by Monday, you know. Right. So anyway, so I think we're going into a phase here, I think, because of the cycles, as I say here in my little paragraph, that into about Monday, Tuesday, maybe not later on Wednesday, we're probably going to whipsaw back and forth. I have massive cycles, both positive and negative, for the U.S. The U.S. cycles affect the U.S. stock market, T-bonds, and the U.S. dollar. So that's probably the general mode for all three of those markets, is this kind of whipsaw area time when they kind of whipsaw back and forth, chop around. And then we should get a resolution by about Wednesday, and then all these markets are probably going to go into a big trend. I think I'm leaning toward, for the stock market, that's probably going to be down. Okay?
All right.
I think we're probably going to take out these lows, and we're going to be correction. If that scenario holds, and I'm correct, whichever way it goes, I think this is going to set up a massive turn, and I have the longer-term fractal forecast that I do, and that's got the biggest turn of the year coming in early August. And I got some massive change in trend points right there in early August, right around between the 3rd and the 7th of August.
So we could go down into August, look for a low maybe.
Yep. Then if that model is right, you could have the potential to make your entire year in a few weeks. That'd be pretty good, right?
Mm-hmm.
Yep. Now we got the dollar here. Here's your key dates there. You might want to write these down. We've been working very well. I got the 10th, that's Monday, and then I got Wednesday is a super date because it's underlying. As I said, we kind of are in a cluster where we have several dates all together. You saw how that worked before on the T-bonds, where it kind of consolidated there in a cluster and then took off. So 13, and then we have another super window, Friday the 14th to Monday the 17th. Then we have a time gap here where we don't have anything until the 24th. So likely we'll get a pretty good trend between about the 17th and the 24th.
I have a question. I have a question from Mike Caruna. August has similar alignments to 1929 and 87 with Saturn direct in Sagittarius. Is that correct?
Yeah, I don't know. I was not able to research that before I came on. I didn't know that question was coming.
Well, either did I, but maybe you could, something to take a look at.
Okay.
All right, go ahead.
Saturn's been going direct and retrograde directs several times over the last several years in Sagittarius.
Okay.
What I like to look at is when the planet goes stationary and then changes. We had that, let's see, I forget when I think that happened a couple months ago. All right, anyway, here's your dollar dates, and there's your dollar chart. And my first date of the month was July the 3rd. Let's go look at that. There's July the 3rd. That was on the low actually came on Sunday night, July the 2nd. That was a little retest of that bottom right there. And then the market took off. Here's your T-bonds. I had July the 3rd for the bonds also. That's probably a U.S. cycle thing. And they did make a temporary low there on Monday the 3rd, and then they went into a kind of wedgie consolidation, and then they broke down yesterday, So bonds not looking so good,
Yeah.
We got the next date to look for is the 12th, and then the 17th. Here's the corn. If you don't want to use your Dale, if you don't want to use your brains, trade the grains. I think this is about the easiest group of markets there are, because they love the moon. Here is corn. Here is June. There's June the 8th. The next morning was a full moon. I think 9:30 in the morning on the 9th was a full moon. There's the high. Guess what? There's the low, June the 23rd. That was the new moon at perigee. That's like a super moon,
Yeah.
When it lines up with the apogee
So
and
it might be making a high early next week with the full moon, huh?
Right, exactly. The full moon is on Sunday.
That was a great trade on the full moon low down there.
What's that again?
Or the new moon low. That was a great buy down there.
Okay.
That's $5,000. That's $5,000 a contract in a week.
Yeah. Well, let's see. That's like 408 roughly to about 376. Is about, was that about 30 cents roughly? So
okay.
$1,500.
Oh, I thought it said 374 to 480.
No, 408. You switch the digits. It's 408.
Okay.
Yep. So anyway, we move up here today on the grains. That could be a good setup to go short again, you know. And now, and one of the reasons I've got gold here for the future is because I have some cycles lining up here for the middle of next week, when is that? Yeah, middle of next week. The Mars cycle, it was pointed for a top in silver on the 5th of June, and if you go look at your silver chart there, it topped the next day, and it's been down ever since. So now the Mars cycle is doubling up. That was I think, a geocentric thing from the point of view of the Earth. Now we have both heliocentric and geocentric Mars, both pointing at gold and corn. These are second cousins astrologically. There's a connection there between their cycles. Believe it or not, there's a connection between corn and gold.
Same color.
And so, what's that? Well, yeah, I don't want to give away any secrets. You got to take my class, you know, Dale.
Well, they're the same color, buddy.
You're like Jimmy Stewart, the man who knew too much, you know. All right, there we go, corn. And so anyway, so I'm expecting some big things, a big convergence, starting next week. It's like a whole week off and on for a week, culminating on the weekend of the, actually that's the week of this, I got a week ahead of myself. That's the week of the 17th, sorry about that. The week of the 17th, and then we have a big culmination around the 21st weekend for the gold, okay? There's my big highlighted 21st. You see that with the underline and stars around it, you see?
Yes.
All right. All right, and then moving ahead here now. Do your people ask questions?
Yeah, I think that was the only questions.
Okay. Anyway, this stuff looks complicated, Dale, as you know, but you know what? When you get used to it, it looks like, you know, stuff from from another planet, to use a bad pun. But it's really, nothing here is over a 5th grade level. So they can learn all about it and get my letter for free and a free class. I mean, I got, you know, like I said, about 50 years of market experience, and I've been studying all this stuff for a long time, and be happy. I got a 5-hour free 5-hour class, basically cram a whole college education for trading into about 5 hours, and it'll show you how to use my letter. It's like having power tools. So no need to look at a market until it's time to look at that market. That's the beautiful thing about this approach. The MICE system tells you when to look at a market, and then, you know, what markets to look at and when to look at them. So there's no need to look at gold. Well, we might get a short-term turn here in the gold over the weekend because of the full moon. The moon acts on the precious metals too on a short-term basis. But in the bigger picture, you know, it says, wow, the gold has not been on my monitor list for quite a while until this month. And so that tells you when and where to look. That saves you a lot of time.
And aggravation.
So anyway, you have what's that?
And aggravation.
And a lot of aggravation, a lot of getting stopped out on noisy trades and stuff. You know, usually shouldn't be, you know. So I have the free letter, the free class, and I'm looking forward to helping some of your folks there, Dale. I'm here in beautiful Naples, Florida, and you can call me at 239-594-3939. And there you can take a screenshot of my contact info there, or nwinsky@embarkmail.com is my email, or you can call me on Skype at norm.winski.
Thank you so much, Norm, for updating us. Nice calls last month, and I'll be paying attention to that gold date. So
okay, great.
Thank you very much. Have a great weekend. We'll trade you more. Huh?
I know you're all booked up, but if you get a cancellation or something in a couple of weeks, you know, for a couple of weeks, I'd be happy to come back on and update what the gold is doing and some of these other things are doing.
Okay. All right, buddy. I'll be in touch. Have a great weekend. Everyone thank Norm Winsky. You have an interest in this type of perspectives on the market. He's one of the best. So
thank you very much, Dale.
So, you know, he has a lot of knowledge if you have an interest in this. So could really speed up your learning curve when it comes to paying attention to the heavens. So,
by the way, let me just comment that my letter includes not only astro, but I'm doing advanced Fibonacci. I'm doing fractal, so you get to learn all those techniques. and all for free, and it's all free.
Yeah.
And
So,
if they mention your name, Dale, not only it'll be free, I'll give them a money back guarantee.
okay, there you go. That's riskless. You can't find riskless any more than that. So have a great weekend, buddy. Thank
All
you,
right,
Norm.
thanks a lot. Have a great weekend. Thanks,
You
bye.
too. All right, and thank you, Face, and thank you, Steve, and Stelios, and Nick, and Grega, and who did I forget? I don't think anybody.
How do I get out
Oh
of here?
yeah, you just leave. You just leave. You know, you could.
Okay.
You just, you know, like the king leaves the building. And
All right, have a great one. Thanks, bye.
Blake will be back Monday, everybody. So things could only get better. Remember, don't just count your pips, count your blessings. You're very welcome, Morrow, Kevin. Take it easy.
I'm having trouble getting out of here, Dale.
Don't worry about it. Everyone's gonna be leaving at the same time.
All right.
Have a good weekend. See everyone Monday. Adios.